So today we're talking in depth about if your loan can be denied up to closing or even day of closing. We kind of touched base on this on an earlier video that we have here on YouTube, but we wanted to meet with Kaili and go in depth because we've had this happen. And so we want to make sure that buyers understand the entire process and that it takes the entire term to get the loan approved. So if you want to talk a little bit about how or why that, when that can happen and all that kind of
Sure. So when you first apply for pre-approval for your mortgage, you're going to fill out a loan application. It's either online, in person, over the phone. So all of the information that is taken on that day, that is what your approval is based on, right? So any kind of change in anything on that application would be grounds for changing your financing type or denying you, changing your loan amount, any kind of change such as changing your job, quitting your job and not taking a new job, changes of types of income. So maybe you were a salaried employee and now you decided to be a commission-based employee. That would be grounds for denial at that time. Buying any new cars or making large purchases, draining your bank account, opening up any new credit, any new debt. There are simply, the list goes on and on and on of the types of things that can cause a denial. So it's really important that when you first apply for the pre-approval, all that information that you give your loan officer, that information needs to stay true all the way through the end of closing. And if something maybe needs to change, you just need to let us know first so that we can walk you through how to do it appropriately or tell you how to, how long to hold off to not kill your deal.
Yes. And I've had clients ask me, if they're able to change a job. And sometimes you're able to, depending on your situation. Sometimes that is an even thing. So I'm always, if someone's asking me anything that can deal with their lending, it's, talk to Kaili about it, make sure, there's not going to be any issues, that you can get a letter stating that you're full-time or whatever, whatever the details that are needed for lending to stay in place. You want to talk to your lender. You have that open communication. It's definitely key through the entire process because you check verification of employment before closing.
We check it several times throughout the loan process, and we do one the day of closing. And this has happened more than once, that on the day of closing, we find out that the borrower has quit their job. That cancels the closing for that day. The sellers are mad, the buyers are mad. I'm upset. I don't like sending a denial. I don't like letting everybody down. The agents are upset. So any kind of change in anything with your file, income, employment, assets, credit, marital status, the list really goes on. So any kind of change, you definitely want to let your loan officer know ahead of time just to be sure you're getting ahead of it.
All right. And hopefully that is helpful information to you. Please share this with your friends, family, whoever you know that's going through the process. Try to educate them as well. Make sure you subscribe to the channel, and we'll talk to you soon.